What's up, guys? It's July 4th, 2025. Got a trading range day today. This is the first time I'm looking at the E-mini today, and it's interesting because NASDAQ was more of a broad bull channel. I'll show you guys real quick, go over my trades, and then we can do the breakdown. NASDAQ had a little more bullish pressure to it. There's a channel right around here. Took a couple trades, took like one full loss and then one minor loss. So I saw this rally. I was looking to get a second piece of it, but then the market never came down to my order. So this is what I was looking at. It never came down to my order, and then I saw that my target got hit, so I pulled it. Saw these three bars and thought that the gap would stay open for a little bit longer. So I went for a second leg here. Then you can see bar 31 stop, filled and stopped me out. That was the full R. Then I saw this second leg, 35, 36. And I thought that maybe NASDAQ would go trade down to bar 9. I didn't get stopped out here, but I hit out pretty quick on 38. It wasn't a break-even trade, but it was a really small loss. One thing I've been doing, or trying to do better, is re-enter the market if the trade premise is still intact. So what I mean, but once I saw bar 38 through maybe 41, 42 start to rally, I went like this because originally I wanted to catch a leg 2 of this move, but I thought it was over because of 27, 20, 29. I just bought the market, put my stop down here, and I got filled on 45. I was redoing some of the quant system classes, and I was going over entry packages. And one thing Ali mentions is how it's important to have a re-entry package for good trades. This trade actually was one of the ones that tipped my P&L in my favor today, because I would have missed this trade and I would have entered right around here, which I did. This was a good rally that I really wanted to be a part of, but I thought it was over. So having a re-entry package is pretty important. I don't have a back-tested re-entry package yet. I'm still gonna have to put my mind on how I'm gonna do that amongst all the other dang back tests. But anyways, so that's 3 trades, 2 losers, losses here. Small, this was kind of a scratch. Then this trade made back my loser and my winner, so that was pretty nice. Then I caught this second leg here. Rallied, sold off at 54, exited on 57. I caught it a day. I was at work. I was trading on my phone, so I couldn't really just be. I don't know if I would have. Maybe if I had kept trading, I would have got stopped out here, looking for a second leg down. I can draw it. So maybe I would have got stopped out. Maybe I would have put my stop at the swing. Either way, I don't really want to be trading past bar 72. Can't say because I didn't do it. But yeah, NASDAQ was a little more trendy compared to the E-mini, which was more sideways. That's pretty interesting. Weekly chart, daily chart. Weekly chart has a bull bar, but this bull bar is kind of odd because all the days were closing around our highs, but if you've been trading this week, you know there's a lot of selling pressure stacking up. Today was a little more sideways, but it closed, I guess, on its high. What is the... Yeah, so we closed some around the high, not necessarily on its high. Or that's the overnight session, actually. That's the overnight session. So we closed right here. Regular. Yesterday we closed on its high. We've had a lot of... Here, what? Oh yeah, this day, I remember this day. I thought there was going to be a big leg too. Sell off, closes around the open, makes a new high. Sold off, made a new high. Small sell off, and then we went more sideways. So this bull bar has selling in it. It's not just a straight up strong bull bar. I think this week's been challenging because of the amount of selling. People are looking for second legs. I know I got trapped that one day when I saw these bars, but I was trading options, so it's okay. When I saw these 2 bars, I know I was trapped for a while. Yeah, let's just do the breakdown. Where is bar 1? Bar 1, chain range bar. Buyers are going to get... Bulls want this to be a breakout. Bears want this to be sort of reversal on yesterday's bar to be climactic. If we do the extra trap trader exercise, bulls buy up here. They buy more lower. And look, they make money on bar 5, so bulls have the upper hand. If we do it for the bears, bears sell bar 1. They sell more on bar 2. You know, they actually get out at break even and they make a little bit of money. So it's training range behavior. Both sides are making money. Then we get a strong breakout bar 5. The bears at short 2 and 3 here and here. Buyback shorts on bar. What did I say earlier? Bar 5, 6. No, this is bar 4 or 5. So bears at short the low of 3, 2 and 3. Short more higher on bar 5. Excuse me, bar 4. And they get out on bar 5 and they get a small second leg here with 6, 7, and 8. The problem is it doesn't really come back to the swing high. So if they don't hit out fast, they're going to be in a losing position. If your stop is down here, where that's where I put my stop, and you hold through bar 9, you would make your money. I don't know if it's worth. This is like 1 or 2. It's like about a point. You're going to sit through all this for 1 point. I think it's okay to just get out right when you start to see bar 8 rally and sell off. Do the trap trader exit training range. So the trap traders are going to be at extremes rather than in pullbacks. So bears are going to make money if they hold their position and scale in. Bar 9, they sells off, and we see that on the tail on 10. Look, and then they start to sell more at a new high, and they make money for a quick period. They make money on 33 all the way to 36. So that's good for the bears, but we're above the higher time frame EMA, so the market regime is bullish. So we have a nice buy the close rally with 3 legs. Could say I like bar 10 for a buy swing. So what I mean is buy the close and then go for 1 to 2R. I haven't done the back testing on that, so I can't say if that's not a trade I would take. I like to trade with limit orders. However, bar 10 sells off and then rallies shagging bears, so they either get a scale in or buy back shorts. Then we get a good buy the close rally. This is an interesting buy the close rally because there's 2 pause bar here and here. So leg 1, pull back leg 2, pull back leg 3, and that's visible pullbacks. Then we count with the pause bar, and this becomes climactic around after 18. Leg 1, pull back leg 2, pull back leg 3, pull back leg 4. And now I want to do trend line breaks too. So we have a trend line break here. We have a trend line break. We actually really don't have a trend line break till here. It's a strong leg. That's a strong rally. 18 almost breaks the trend line, but then bulls buy the first pullback pretty quick. And then you can see 10 or 19, they start to take profits. Trend line break just means when the next bar takes out the prior bar's low. So 12 took out 11's low. Buy the close rally, 3 to 4 legs higher. Then we sell off a small wedge bottom into the EMA. This wedge bottom didn't have enough buyers willing to hold, so more bulls think we're at training range and they're buying lows, not highs. Bulls buy up on 20. Bulls are buying the high of 19, 21, and 22. So we put an order there, and then look, they buy more right around the EMA, the 26 low, the EMA, and they get out break even. Bar 30 bear bar closing on slow, but it's not breaking 29's low. Then it sells off for a few legs down, leg 1, pull back, leg 2. That same dynamic exists here, except, look, bulls that buy up here, maybe they're scaling in, they buy more on 32. They don't really get that break even price on 30. Excuse me, they buy more on 34. They don't really get that break even price on 35. They sell out quickly and we get a quick splash down, 35, 36. Now we have 3 legs down. Leg 1, pull back, leg 2, pull back, leg 3. The strong bulls are going to buy more here. Maybe they buy a little portion here, and then they're going to see 36 bouncing off this range low, right around the 10 high, or excuse me, 10 midpoint for the previous rally. So there's going to be more buyers, and these bulls are going to hold for a tag of their original entry. So they're making money. They're looking for a swing up. The way double tops are formed is when bulls buy here, the market sells off. And when it rallies back to, so then bulls buy more. Then when it rallies back to their original entry, bulls are going to sell out of longs at their original price, so they make money is on their second entry, and that's enough selling pressure to create a double top, which we get 2 to 3 legs down. Leg 1, pull back leg 2, pull back leg 3. If we're going to have a correction to the EMA, the expectation is some form of 2 to 3 legs down. Whether in this case it was visible legs, so we could see 49, we could see 52 and 53, or maybe it's something like this. 7, 8, 9, where we can't see the legs, but we see the trend line breaks. 9 doesn't really break the trend line, but it does rally for a split second and then sell off. So there's a hidden 3 legs where you could count like 1, trend line break 6, pull back, like 2, trend line break 8, and then sells off 9. There's your 3 legs into the 𝐸 rallies. So there's that 3-leg correction, more fractal. This is more visible. Now we have a nice rally up from the low of 36 to the high of 45. I would start the pull from 42 because that's the last spot bears got trapped. Put it at the high of 46, and look, you get filled on maybe 48, 49. Sit through a little bit of drawdown, and then you catch the rally all the way back up to your target, the previous swing. That also, the reason I do that is because that creates a double top. That's why I always go for the previous swing, because in case bulls get out. And look, in this situation, bulls did get out at the swing high. They were taking profits right here, waiting to see what happens. It sells off. We have another rally here, but it's a 3rd leg and it's shrinking. Like 1, pull back like 2, pull back like 3. It's starting to shrink. Bears have made money here. They made money here, so they're going to try and make money again at the trading range highs. Bears want this to be a full-on reversal. Bulls want the party to keep on going. Rally 55 through 57. If you're looking for, or I guess 54. You're looking for a 2nd leg. Just think in that context I did is 3 pushes up. 1, pull back 2, pull back 3. So probability for trading range go up in a leg 3. And that's what we see here. Trading range behavior. Give me 1 second, guys. I got to hit out of this trade. Alright. I'll show you guys the trade I took in a second. So trading range behavior. Bears are selling highs. Bulls are buying lows. Deep. And there's, look, 2-legged pullback. Remember I was saying form of a correction to the 𝐸. It's actually 3 legs because there's a hidden leg here. Leg 1, pull back leg 2, pull back leg 3. Bulls that are trapped here, buy more lower. Hold on. There we go. They make a little bit of money with 69, 70, 71, but then ultimately it sells off and bears get that 2 to 3 legs down. Leg 1, pull back leg 2. Leg 1, pull back leg 2, pull back leg 3. So, trading range day to day. See what tomorrow brings. Here's the trade that I took it twice. I had a re-entry package, so I wanted to catch the 2nd leg here. I got filled, then I exited right before I hit my target, or hit my okay. I wanted to catch the 2nd leg of this, so I got filled here, and I exited right before I came back to my entry. Then I saw this bar, so I bought it a little bit late right here, hoping to retest here, but then it started to sell off, so I just hit out. So not too bad. I'll wait for the next trade to come along. Hope you guys did good today. Tricky times. The markets are tough because it's a trading range. Trading range behavior is always hard for a breakout trader. Let me know how you guys did. I'll talk to you tomorrow. If you learned something, share a show. Don't be a hoe. Thank you for your time. It's Friday tomorrow. Thank you.